the inevitable will happen, but it will need to come off an exogenous event, because the more and more and more that these things become priced in, in our view at least, we don't view that the rate hike is going to be the thing that's going to drop the market. We don't view that the inflationary narrative is going to be the thing that is going to drop the market. It could come from something from the Fed making a policy mistake, maybe really aggressive with the balance sheet reduction and how that impacts interdeal lending. But these very obvious key points we don't think are going to drop the market. We think it's going to be an exogenous event where it's like, out of left field, nobody saw that coming, and then there's just forced deleveraging. But the more and more and more that you get through that time period, I think that window closes. And when that window is closing, these structural flows come back in. And all the call activity, the Vanna support, the passive investing, all of that, right? The Tina effect is real. And a lot of people may not want to admit it, but if you talk to fund managers out in Asia or other places in the world, they'll say, well, I don't want to be exposed too much to European equities. I don't know about European rates right now. What's going on right now in the bond market in the US, maybe it's a little bit of a toss up. So where am I going to put cash? Okay, US equities. It's sort of like got no other choice. So all these structural flows, as they come in and digest, it leaves the market more of a chance to have this bullish case. And I think that's our view as well. And I know it's sort of like contradictory, right? Because we're the vol guys in the room. So we're supposed to be like, the world is ending, vol's coming. But the truth is, it's hard for us to look at what's going on in the market from a trading standpoint and look at that and say, yeah, Armageddon is coming tomorrow, because that's just not what the flow is showing us. That's just not what the numbers are showing us. That's just not our belief. So we think actually that the market is going to continue, equities will continue to be supportive. If all things stay same right now, right? If everything stays the same right now, we think equities will continue to be supportive, and you'll have more of a bullish case towards this as opposed to a bearish case. But if you do have an exogenous event, the likelihood of that sort of big sell-off is there because of how extreme positioning can get at times.